Hi, everyone. Welcome to the Timing Research Analyze Your Trade, episode number 170 for August 24th, 2021. We are recording this at 4 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So I've arranged for Jake Bernstein to join us, and the option professor is also here to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Thanks a lot, David. And great to have Jake Bernstein with us today. Jake's been in the business for longer than we could remember, and he's forgotten more than we all know. So it's very lucky to have him here. And he's going to go over 15 stocks, hopefully all of them. And then we're going to turn him over to some of his specialties in the commodity sector, because we had a very big run in the commodity sector, and it has definitely slowed down a bit. So it'll be interesting to hear Jake's insight on what the next chapters might be in that area. But first, let's introduce Jake Bernstein to everybody who's not familiar. And Jake, a little bit about obviously your background, but also what's going on at the firm.
Thank you, Jim. Appreciate it. Sorry, I'm a little bit hoarse today. We've had a lot of smoke here in California.
Yeah.
I've been trading for 54 years. I've written about 43 books. I'm a real trader. I trade practically every day. Not a day trader, although many of my trades turn out to be day trades. Purely technical, no fundamentals whatsoever. And happy to talk about commodities and stocks and cryptos even.
Sure. Yeah, there's a lot going on here. There's no doubt about it. And we're coming into Labor Day, which is kind of like the turn in the Kentucky Derby sometimes, right? You know, we come around after Labor Day, and then the markets maybe start making some pretty significant moves going into the end of the year.
There's also been a pre-Labor Day trade,
yep.
buying the S&P or the Dow the day before Labor Day, getting the day before, and getting out on the day before. It's a very quick trade, high probability.
Yeah. Well, let's go through these trades or these stocks that people had questions on, and then we'll move forward from there. The first one is Amazon, AMZN. This was up around $3,800 a share, then fell out of bed to under $3,200 a share, and now it's at $3,300 today.
So
got a big gap there, I guess.
And here's the Amazon chart.
Yeah.
Based on my moving average channel method, the stock turned bearish right over here and reached all of its profit targets. There's a very interesting high probability seasonal trade that starts today to the upside. It's got a very, very strong profit to loss ratio, about 42 to 1 for the next 10 and 15 days. So I would look to be a buyer of Amazon on any intraday signal, which we already did have during the day today. So I think Amazon goes higher from here.
Yeah, that gap is like a magnet, huh?
Absolutely. Usually what you'll get is a move to the weekly resistance. Let me put the weekly chart on here, Jim. Hang on one second.
Yeah, sure. I'm going to do a little rough math here and see if I come up with a number that you think makes any sense on the throwback rally here.
So the first resistance in weekly is 35.31. The second resistance is 33.57. The second resistance is 3,500 approximately. So I think that's where we're going. That should be a pretty quick trip the way Amazon trades. You can see it's basically gone sideways for a long time, which has frustrated a lot of people.
Sure. Do you think it can go away and fill that gap, or do you think maybe midway in might be the best case scenario?
I think in this market, it can go all the way.
Yeah. Because it is such a bellwether of every ETF out there.
You know, there's one guy, I forget his name, he goes around saying, the only stock you'll ever have to own for the rest of your life is Amazon. And that's frustrated a whole lot of people in the last 5 months.
No doubt about it. Of course, the price being in that area, maybe that really makes it an institutional stock only.
True enough. Well, most people who trade Amazon trade the options instead of the stock itself.
That's true. That's true. Well, the next one up was Tesla, and it kind of looked like it was ready to go here when it broke above 695. But do you see it as something that looks like it's going to happen here?
Let me bring it up on the screen, Jim. Hang on one second. So
it got nailed a little bit when they had that cruise control problem, huh?
Yeah, the trend is still up. It's still a very strong stock, and I would not be a seller. I wouldn't be a buyer up here. I'd buy the bottom of the channel retracement about 675, but in the short term, it's still a bull trend.
Yeah, looks pretty good. CRM,
okay.
Salesforce.
Mm-hmm.
That was looking like it might be breaking out as well. I don't know what it's done in the last day or two.
Oh, yeah, definitely a breakout here. You can see it on the chart right here. The
Yeah.
only problem is that when we see a new high for the move, we also want to see a new high in the momentum indicator, which has not happened. And that is a negative. It says that we could be in for some weakness here. I'd be very careful if I own this stock.
Yeah, maybe pulling back towards 248 to 252, something like that.
Somewhere in that area, bottom of the channel, which would be about 250, 248. Yeah, that's
That-
good, 248 to 250.
That would be maybe a better entry level, huh?
Yeah, I would imagine so, yeah.
All right. Well, this is a little bit up your alley in the commodities. Old John Deere and the tractors. I guess they've been selling tractors like hotcakes. Is this thing on a never-ending journey to the upside?
Well, the good news this year is that farmers have a lot of money.
Yeah.
When farmers have money, they buy equipment. So that would be normal in terms of what's happening in Deere. But you can see what's gone on the last couple of days. We had a very clear sell signal right over here with 2 complete bars below the bottom of the channel, confirmed by Williams. So Deere actually for me is a sell right now. I would not be a buyer.
So you're not seeing it as a pullback that ended, and now we're in the process of blowing out that high. It probably will fail at the red line or even before.
It should, and in fact, we should come back down to weekly support, which is where I would be a buyer. Weekly support being the bottom of the channel, the green line, and that number specifically, let me look it up in 1 second, Jim.
Now, I remember you said that you like the 28 RSI a little bit better, and I've noticed that that is definitely a smoother RSI.
You mean this one here?
Yeah.
So we're actually using momentum 28.
Oh, okay. And
Okay.
so there, it's trying to get above the 50 number, but wouldn't
know,
take
the
much to.
Intermediate term trend is still bullish, no doubt about it, but I wouldn't be, excuse me, I wouldn't be chasing it. I'd be buying the bottom of the channel. That number specifically would be 346 and change.
Gotcha. But it's got a good backdrop with the demand for the equipment. That's for sure. Okay, this one is the drug company Moderna, and of course, it's always in the news one way or the other.
Yeah, let's bring it up on the screen.
It's been very volatile, I think.
No doubt about it. Here we go.
Well, today was down 17, so it's not for the faint of heart, as they say.
That's right. So let me go to the daily chart. And the trend's still very bullish. The uptrend started all the way back here. And so it's been a very beautiful performing stock. Numerous opportunities to buy the bottom of the channel support. And the trend is still clearly bullish. Made a new high when momentum made a high. So there's no divergence here. Still very strong stock.
Now, when your red and green up at the top kind of get together, don't you say that sometimes that's a precursor to a very large move one way or the other?
Yes, and when you're in an uptrend, if the channel narrows, that's a negative. If you're in a downtrend and the channel narrows, it's a positive. And when the channel widens in an uptrend, it's a very positive sign. So again, of course, that depends on the scale of the chart.
Right. Yeah, whether it be a daily, weekly, monthly, or whatever.
Right. So the widening channel here is definitely a positive. It underscores the bullish approach we have to this stock.
All right. Gold got whacked pretty hard, but lately it looks like it's trying to get its legs. Whether those legs will hold or not, only time will tell. But somebody wants to look at the GDXJ, which are the junior miners. And they started to make a turn. Are they to be?
Something super important on gold. Check this out. We see a new low in price, which I'm going to put a line on the chart. Hang on 1 second, Jim. We do not have a new low in the momentum indicator, so I'm going to put a line over here. So we have a bullish divergence set up.
Yeah.
If we close above this point, let me put it on the screen over here. Closing above this level gives us a buy. We've already triggered a buy in some of the cheaper gold stocks like Harmony. Let me bring that up on the screen.
How about Kirkland?
What's the symbol?
KGC.
KGC. Kirkland
I took a nibble thinking he would stay above 550.
Yeah, still no trigger here, but we have this. They're all set up pretty much the same way.
Yeah.
And this is certainly the time of the year. Some of the biggest rallies in gold have happened during September.
That, and also these things are discounted quite a bit. So, you know, you can put your stop fairly close to wherever the lows recently were and take a shot, you know?
You know, everyone's convinced that Bitcoin's the new gold, so they don't want to own gold, they want to own Bitcoin. But I
Yeah.
think in for a surprise.
Yeah. All right. So there we got on the gold. And what about Palantir? That started to make a move to the upside and a lot of options action, unusual option action. A lot of it was due like this Friday. So what's happening here?
I love that stock. It's a beautiful stock for the longer term. Did you
Yeah.
see the recent announcement regarding gold?
What you mean with the 50 million coming out of Palantir? Yeah,
Right, right.
that's a nice endorsement.
Very nice endorsement, but the overall, the intermediate term chart, by which I mean the weekly, doesn't have enough history to give us a good read, but I think this is definitely a stock to own for the longer term.
And with this options action, it looks like some people are definitely speculating it might even break out in the short run, huh?
That's right. I think it has broken out in the short run. Our buy signal came right over here on this day.
And your momentum, the blue looks very nice. You like it pointing up when you're bullish, you know?
Absolutely.
Okay, so where are we now? We are over at Walt Disney Company, who getting more subscribers than you could believe.
Disney's got a beautiful chart for the intermediate term. It's the kind of stock I want to own as opposed to a stock I want to trade.
Yeah.
Certainly it's had some pretty big moves up and down, but it's much better of a stock to invest in as opposed to trading. And the same would hold true for me regarding Apple. We've owned Apple for a couple of years now, and we don't intend to sell it.
No, it's a mainstay of what everybody does when they want to get their phones, huh? Okay, here's similar to the gold, you know, because the gold has been on the defensive and people are just hoping it's bottoming. And hope is not a strategy, but it's an idea. Next one here up is BABA, hoping that it may have bottomed, but hope is not a strategy. What do you think?
Well, if the Chinese government would stop talking about it, it'd probably go back up again. But there's no question that the trend turned down, and it turned down very early in the move. So this was our sell setup right over here. This was our sell trigger right over here. So it's definitely in a downtrend, and I don't see a very, very quick end to this decline.
You know, they do have the Beijing Olympics coming up in February. So my feeling is that they're doing all their dirty laundry here in the summer. And as we go into the fall, things are going to be more quieting down because I think they want to have a good, you know, vibe when people come to the Olympics in February. So I was thinking that we might be seeing a low point in this 30 to 60 day range. And then maybe October, November, December, as we go towards that Olympic time, things may settle down over there. Do you think that might be possible?
Certainly that wouldn't surprise me, but I'm really not good at fundamentals.
Yeah.
I'm just a chart guy.
Yeah, right. Well, you'll see it if it starts happening. So if this low of 152 is not taken out in the next 2 months, it might be increasing the odds of what I'm talking about.
That's correct.
Yeah. Because it would make sense, you know, like, again, they have a kind of a choreographed situation sometimes, you know, so I don't think it's coincidental that all this stuff is hitting the fan 6 months before people are going to go there for the Olympics. You know what I mean?
Highly choreographed, absolutely manipulated, no question about it.
Yeah.
I'm very careful when I trade Chinese stocks.
And then that Kathy Wood is starting to take a bite after she said she just sold them all. So I guess she changed her tune pretty quick.
She did a quick turnaround, in fact.
All right, Best Buy. I think this was kind of volatile because their earnings came out. Oh, they were volatile to the upside. So, yep.
Yeah, and the trend is up. It turned bullish again. So we had two bars above the top of the channel, confirmed by Williams right over here. We buy the bottom of the channel. First target is the top of the channel, and now we trail a stop. So the trend is definitely up. And I always like to look at the weekly rather than just the daily. So you can see that weekly, it's basically gone nowhere.
Right. Which means if it does break out, that's a pretty good base of which to add to the price. Huh?
Absolutely.
Yeah. All right. Well, the granddaddy of GDXJ is GDX. So let's see if GDX, the large cap miners, look any different than the little guys.
Very similar chart to the others.
Yeah.
You've got a new low without a new low in the momentum indicator, which is a setup for a big bullish move. some shades of that move starting in the last couple of days. But again, the most important thing in gold this time of year is September. It is the biggest month of the year. And as I've said before, some of the biggest rallies in history over the shortest period of time have happened in September. So don't be surprised.
Let's look at a couple other metals since we're in metal land here. SILJ are the juniors for silver.
Yep, the charts look pretty much the same in silver and gold.
Mm-hmm.
I think, hold on a second, let me get it right. I think you're going to get more bang for the buck in silver than you will in gold. Here's the silver, similar chart as you can see.
And, I got a little cool on the Freeport when it broke under 36. FCX and SCCO, they've been on the defensive. Are they?
They're definitely trending down, but we do get a seasonal low in copper in a couple of weeks. So I wouldn't be surprised if it heads back up again. And Southern Blue Copper has been a beautiful stock for a couple of years. It's time for a stock. I wanted to show one more.
They were great. They were great for a long time. I mean, I started into this thing at $8. So obviously, I enjoyed a nice ride on this thing. But, like I say, I was a little concerned that all the averages, like you see, are kind of rolled over. You think waiting for a close back above 36 or 40 might be a better thing if you're a longer term holder?
I would, and let me show one stock before I forget.
Sure.
This is a silver mining stock, EXK, that I've been following. And you notice the difference between what I showed before. EXK is actually triggered a buy. And let me show you why I say that. So I just don't want to say it. I want to show it as well. So here's the divergence setup right over here. The trigger point would be when we end any given day right over here. So let me show that very clearly. I'm going to take this little line here, put it right up here. And you can see what happened today because this is live data. This number is actually, let me fix it, is minus 1.04. So let me fix that number, show you what's going on.
It's like buying an option.
It's
it's under $10. I mean, you could hold it forever. And as long as they don't go out of business, you got an option on it for the rest of your life.
That's one of the things I like about it. It's a fun little stock to trade.
Yeah, or trade, right?
You got to use limit orders. Let me show this. Hold on 1 second.
But earlier this year, it was almost 75% higher than where it is now. So,
right.
Putting it in your cookie jar and forgetting about it might not be a terrible idea.
Right. So we actually triggered a buy today because we ended the indicator at -1, which is higher than -1.04. So we actually got a buy trigger in EXK today. We'll see how that plays out.
Yeah. And where's the downside? Very limited.
Very limited.
Yeah. Now the industrial metals have done really well lately, and I've been all over them. Can you look at X and CLF? Those are Cleveland Cliffs and United States Steel. X and CLF.
Here's US Steel.
These look like they really want to go somewhere.
Very nice uptrend. And Cleveland Cliffs CLF. Let me bring that up on the screen. One moment, please. Computer's getting a little bit stupid here. 1 second, please. Here we go. And here's Cleveland Cliffs. Very similar chart.
Yeah. And what about PAVE? That's the infrastructure deal, and it gives you a basket of all this kind of stuff.
Yep, let's bring that up on the screen.
Because that looked like it was breaking out as well to me.
Let me show one in a second as well. Here's PAVE. Sure. So one you want to look at is a lot less volatility is this one. CENX, CENX. It doesn't trade as much. It's not as dynamic, but it's very nice for lower risk. And it usually will have a pretty much of its own mind here. So check this one out for a buy in the next couple of days.
Yeah. And if it goes back towards 16, you're talking about almost 50% higher than it is now.
Exactly.
Yeah, nothing wrong with that. All right, well, let's jump back on the list here, and we're talking about Facebook. Facebook and Google seems like peanut butter and jelly, isn't it?
No kidding. So the uptrend continues unabated. Every decline to the bottom of the channel has been a buying opportunity. The daily chart is bullish. The weekly chart is very bullish. The monthly chart is very bullish. So Facebook, for a lot of people, can do no wrong. It's just a question of whether they make any missteps in the next few months.
Well, the main thing is their eyeballs are there. And in this day and age, if you want to do any advertising to the masses, it's YouTube and Facebook. So, as long as that's the name of the game and they control the two highways out of town, you got to take them,
Correct.
General Electric, Mr. Larry something up there, who's been trying to undo what Jack Welch and Immelt did for 30 years, which is buy 9 million companies that didn't know what they owned.
I hate the reverse split in G. I just absolutely.
Well, I think that was a situation where certain institutions and head managers, they can't buy stuff at $12.
Right.
Because when they go in and put $50 million in there, it looks like they own 9 trillion shares. You know what I mean?
It didn't have to be a 10-for-1 reverse split. They could have done 5-for-1, but either way,
Yeah.
it's not one of my favorites, and it is definitely in sell mode, which happened right over here just in the last couple of days. 2 bars below, Williams below. So it's a sell at resistance, and I really don't have very much hope for this stock on the upside.
Yeah, they cut the size of the company down and then they quintupled the price of the stock. So it's an interesting concept. But that guy Larry's no dummy, so I'm sure he has a plan, and people are starting to bite into it a little bit. Next one up is Materials Corp, MP. It's a new one on me.
Here you go. So this one is definitely in a downtrend. It gave a significant sell signal with 5 bars below the bottom of the channel. Usually indicates a very weak stock. So I'm not sure where it could go down to, but it's definitely not in an uptrend. I don't see a buying opportunity, or I see a selling opportunity at resistance, which is the red line on top of the channel.
We do have another one, Freeport McMoran, but we already covered it. I was wondering out loud, are there any companies that you're kind of looking at that you thought, you wanted to throw out there as a few examples?
Yeah, hang on 1 second. Let me just turn off my ringer here.
Sure.
Yeah, okay, let's check this out. I like BHP. Let me bring it up on the screen. And the reason I like BHP is it's selling off sharply, but the intermediate term trend is up. So when it comes down to support like this, after being in a big uptrend, I like them. It says BHP. I also like Rio Tinto. Bring up on the screen here as well. And again, these are giving back after a lot of gains. So we want to go to the weekly or the monthly chart. So here's the monthly chart coming right down to support. So it's one of these material stocks that's very similar to the Southern Peru copper in terms of its behavior. And let's not forget the copper ETF, COPX, which is a good way to participate in cheaper dollar amount. Again, you can see these stocks pulling all the way down to the bottom of the channel.
Yeah, a lot of things, 25% discount is not bad.
Not bad at all. We also want to look at some of the commodity stocks. For example, I like, well, actually some of the commodities, which would be, for example, cocoa. Let me bring the cocoa chart up on the screen. So here's cocoa. You can see what's happened here. It's given us many trading opportunities to the bottom of the channel. So it's a good trading stock, a good trading commodity, makes some pretty good money, and there's good liquidity there. And one of the things you also want to look at is coffee, which is a big bull trend. And here's the coffee chart. Just turning, it's a very beautiful chart technically, and headed for much higher levels.
You want to throw Starbucks up there to see if something, because that got discounted down here to about 113. I was taking a little bite of it down here with a stop underneath 113. Does it make any sense to take a shot at Starbucks down here on a little bit of a discount?
I like Starbucks. It's a good stock. And remember, Starbucks takes advantage of the low coffee prices we've had for the last few years. And they basically loaded the boat with a lot of coffee. So their input costs are really cheap. Sugar has been cheap. Coffee's been cheap. Cocoa's been cheap, all this stuff, and even milk has been cheap. So they've got some very low input costs, which of course will contribute to their bottom line profits if we're talking fundamentals.
Now, let's go into the commodities. I want to start out by just saying there's a Vanguard commodity mutual fund, VCMDX, that I'm very familiar with, and it's gone from $22 last year when we bottomed in commodities, and it's gone all the way up to 34 and change, and now it's at 33. and it tracks the Bloomberg Commodity Index. And
Mhm.
so, I'm just getting a little bit of a feeling that we may have hit a high point in the commodity sector, but certainly the trend looks like it's still up on this stuff. But let's kind of start out with the agricultural commodities, and maybe take a look at soybeans and corn, and see if you think you see something there, because
And let's first take a look at DBA, which is the commodity ETF.
okay, sure.
DBA daily chart. You can see what's happened, and I'm sorry, weekly chart. Weekly chart's in a very big bull trend, has given no indication of a top, still very bullish.
Right.
And going to the monthly chart, you can see what's happened on the monthly. This is the first time in a number of years that we've actually started a bull move with 5 consecutive months above the top of the channel. So I think this is the beginning of a big move in agricultural commodities, specifically the grains and the soybeans, the cattle and the hogs. And by the way, we have the ETF COW, which is the ETF for the meats. You can see the bull move there has started as well. And it's been going on for a long time. The nice thing about these commodity ETFs is they're not nearly as volatile as the underlying commodities. So
Well, that's right. Yeah.
slow and steady move.
Right. In fact, like on that one I mentioned, going from 22 to 33 is a 50% jump in the price, and that's without margin calls, forced liquidations, and sweating bullets on every crop report.
Exactly. So,
but on the other hand, I mean, this soybeans has been pretty wild lately. We were up, where did we top out? 15, 16 or something, and then we went down, and like today it's up 40 cents out of the blue. So I mean, it's are you seeing, I mean, like corn, what did corn go to? About 7 or something, and now it's at 5.5.
Here's the bean chart. There's
Yeah.
been a huge rally in soybeans, still correcting, hasn't even given a sell signal. And corn has been
I mean,
very
I think we both thought 7 was a little rich on corn, wasn't it?
absolutely. Here's the corn chart right here. So we hit 7, just exceeded it a little bit and sold off. This is really the first time in many, many years that farmers have actually been able to make money,
Yeah.
assuming they didn't hedge their crops too soon. So I don't think this move is over as yet. There's a lot of cycles in beans and corn that are bottoming right now or still in an uptrend. So I think the agricultural commodity moves is still beginning.
And it's still, and the way it may sustain itself is that these weather issues are not one-offs. In other words, next season we could have the same kind of problems.
Oh, for sure.
Yeah. Because I mean, you'd have to understand, you would imagine with these high prices, every Tom, Dick, and Harry who's got an acre or two is going to plant, right?
That's true.
So, I mean, you would think that would be the case, but they can plant all they want. If they have uncooperative weather, it's not going to be helpful.
Right. And check this out, Jim. This is soybean oil. And people don't.
Yeah, you like that. Yeah.
Check this out. From where we started this move, let me show you this. It'd be interesting. From where we started the move all the way down here, I'm going to go even to this. Hold on one second. Started the move right over here. People don't appreciate the fact that soybean oil prices at their peak have jumped well over 100%, which ultimately, of course, is going to be a very significant increase at the retail level. So check that out.
Right.
I mean, that is like $27,000 per futures contract, where the margin was $1,500.
They may start charging for the soy sauce at the restaurant. Huh?
Probably will.
But I guess when you look at these charts, though, the thought is has the majority of the move occurred, and then we are at best case going to go into a consolidation phase up here? Or do you think there's another significant leg to the upside? What's your gut say?
There's nothing on the chart to suggest that we're going to go down again.
Right.
Everything on the chart says we're going to go higher. And if we look down here, and this is super important, Jim, small trader sentiment. So the small trader now is bearish on soybean oil. They were very bullish at the top. So they're a great indicator. And so with this very, very bearish small trader sentiment, it's an indication that we're going to go higher. Look where the small trader was when this move started. They were the most negative they had been in many, many years. So
yeah.
very important indicator.
Now, what about the commitment of traders on these grains? Have we seen any action there?
Not recently. Let me get a chart. Hold on one second, Jim. I'm going to go to a different chart.
Well, that's a
So
good indicator, though, that yeah, it may have more legs to go.
So here's the soybean chart. Let me bring it up. Here's the bean chart. And commitment of traders right over here in green, showing huge commercial buying before this big cyclical up move.
Mm-hmm.
Recently, they've backed off. They're not doing any more buying right now.
No. And with the seasonality, are we going to, still be a little bit under pressure as we go into a harvest in the October, November?
Yeah, you usually get lows in September, October. This may be a little bit different this year. A whole lot depends on what the crop report tells us regarding the size of the crop that's been planted. And with the weather we've had with the excessive moisture, we really need to be careful about overestimating the size of the crop. It may be lower than we think, which is probably what the bean market is telling us by going up 40 cents today.
Right. And then, of course, Brazil is a big bean producer and their weather has been terrible.
Yeah, I'm not in touch with the Brazilian weather, but I think you're right.
Yeah. Okay, so the grains still look fairly stable and they may have a future still. To you, it doesn't look like a big top's been made and it's going to fall apart, really.
Now, a lot of people are
No
gonna
evidence
say,
of that right now.
no, a lot of people are going to say, look, we topped out here, we
Yeah.
topped it over here, we topped it over, so we've got a triple top. But I don't really look at triple tops. They're not part of what I do. I look
Right.
at the cycles. The cycles are very clear. They're due for another low at the end of this year. So watch out. Watch
Yeah,
out.
a lot of these things it's got so far away from their moving averages that in reality, all they're doing is digesting their gain and moving a little bit back towards the mean.
Sure.
And when it goes back towards the mean, if the fundamentals are the same, that's where it might be a time to take another bite at the apple.
Yeah, let's not forget about this one. Before we go on, I want to show the lumber chart. Truly amazing what has happened in lumber.
Yeah. Well, when I used to hear like lumber used to be two guys in a corner trading against each other. I mean, because it was always limit up or limit down every day. Remember?
That's about the size of it. But check this out. If you take a look at the size of the move in lumber from the cyclical low, which is right over here.
Yeah.
High. This is what's happened to lumber prices. And people are saying, how come it's costing so much to buy a house these days? Well, geez, lumber prices have gone up 357%.
Right.
Certainly they did crash in the last couple of months, but it's a huge move. Lumber prices are just now returning to normal.
You don't see any correlation with lumber and the general commodity sector. Like, obviously that is going right back down to sea level, which would mean going back to $10 or $9 beans. It would be like going back to 3 or 4 or 3 on the corn. And yeah, and you don't see a correlation between the two.
No, I don't see a correlation between those at all.
Yeah. Because that obviously looks like a squeeze, because what happened obviously is they were not ready for big demand. Everybody started building into a no supply market, and that's what happens. And then obviously they start opening up the yards and they start supplying, and there you go.
I think there was also some issue regarding imports of lumber from Canada, but I don't remember exactly what that fundamental situation was. But one thing you want to look at is this again: small trader is the most bearish they have been since 2008.
Yeah.
Go all the way back to here.
Yeah.
It took a huge bear market to get the small trader negative, and that is a very important correlation.
And I was looking at the home builders, IHB and ITB, and they look like they're going up. So I would imagine that demand for is going to go up. So I would certainly not be shorting it down here under 500.
Well, let's take a look at XHB. One moment, please.
Mm-hmm.
Here's the one of the home builders ETFs right over here. And we'll bring that up right over here. And you can see what's happened. It's still a very big bull move.
Yeah.
And one thing that is a little bit off the beaten track, let me show you this one. FPI, Farmland Properties. This is what's been happening to farmland. So the ETF for farmland has basically doubled. No surprise over there. But what's interesting about it is this. They're paying a dividend now of 1.6%. At the bottom of this move, that dividend was about 7%.
Buffett's always big on farmland, isn't he?
Well, supposedly it's Bill Gates this time. They're claiming that he owns more farmland than anybody else in the country.
Yeah. They're not making any more of it, I guess, you know?
Well, that's what they said for a long time, right?
Yeah.
So what else do you want to look at today, Jim?
Yeah, well, let's go. Next sector is energy, and energy broke underneath 70 and 71 on crude oil, and that looked like the end of the game. It went down to like 62, 65, but now we're snapping back up towards 67, 68. Is this just a dead cat bounce, or do you think the lows are in and time to march up and blow out 70?
You know, when crude goes down into the lower 60s, they turn the spigot off. When it goes up to the 70s, they turn the spigot back on. So
Yeah.
no surprise that we bottomed out here. And I think we will go higher from here. I think what you want to look at is natural gas and heating oil. Natural gas especially has been in a bull market of its own. Let me show the chart. It's a distinctly different chart than the other.
But based on that oil, the oil shares of Chevron, Exxon, and those guys that are paying the great dividends might be something to look at, huh?
Definitely. And also look at the natural gas, which we just put up on the screen here. So natural gas has been in a world of its own.
Had a correction, but it looks like it's gotten back its legs, huh?
Yeah, you want to look at the weekly chart, which is the very significantly bullish formation.
Oh, yeah.
Any move that begins with 5 consecutive bars above the top of the channel, that will usually predict a much bigger move to come.
LNG, what's LNG looking like?
Yeah,
Yeah.
Let's look at Cheniere. Here's LNG. And a very similar chart to the natural gas. No surprise there.
So had a bit of a dip, but it looks like it's got some legs back, huh?
And I always like to look and see if they're paying a dividend. So these guys are paying nothing. Sorry about that. But I do like to own stocks that pay dividends just as a fallback position.
Sure. Now you were mentioning a heating oil. Let's mention it because, some people do like to figure, hey, winter's coming and let's take a shot at it. I'm seeing the heating oil looks like 207, up about 6 cents today.
Yeah, very similar chart to the other energies. Actually never turned bearish on the daily chart.
All right, so energy, not too shabby. It looks like maybe the pullback could be over and it could have a brighter future going into the fall.
Right.
All right, the gold, as I was looking at, the actual gold future, there's a 1-year moving average that I look at on my 20-year graph, and it comes in at around 1817 or 1815. And it was at 1840, so it's rolled over. And once gold could not stay above 1840, it gave me the sell signal. And of course, we got a heck of a drop. Now it's back up in my face here at about 1800. Is this thing going to fail, you think, up here in this 1815 where this average is, or is this going to get going? Because today's high was 1812 and it closed at 1806. So what do you think?
People say that Bitcoin is the new gold. I doubt that.
Yeah.
I think gold's going much higher. I think if you can take out the low of this bar, and that low specifically being 1874.
Yeah.
Above 1874, I think we will go to new all-time highs.
This lady who manages gold stock, she says she owns some company. I forgot the name of it offhand, but she goes, listen, the monetary base in the last 10 years has gone up 9 times. And in the last year, it's doubled. That's got to be good for gold at some point.
I would agree with that.
Because that's a lot of printing, huh?
That's true. And, let's not forget about Bitcoin. Let me show the Bitcoin chart.
Oh, yeah. Let's look at Bitcoin and Ethereum while we're here. Yeah.
Because Bitcoin has really been a stellar performer on the indicators. It's a purely technical market. And here's the Bitcoin futures. And the daily chart has been absolute perfection. From the buy trigger right over here to support here, reaching all targets, absolutely perfect picture on the daily chart. And of course, the Ethereum has been even better. Here we go. I mean, I can't get away from the idea that I don't understand either of these markets myself. I don't see how you can create trillions of dollars of value by just saying it's valuable. My son, who works for a crypto company, has tried to explain this to me over and over again, but I just can't understand it.
Yeah, I've had it explained. Obviously, Ethereum has the blockchain and the way of monetizing that. So it's got a 2 thing going on, but it's viewed as scarcity. It's viewed as the next thing. Jack Dorsey believes it's something that the internet, it's the currency of the internet, and all these countries that have these wacko currencies, and every time you want to transfer or remit money, there's all these expenses involved. And he believes that this is the solution to the international problem of currency. And there's a case to be made there, you know.
It could very well be. Like I said, I don't understand it, but that doesn't mean I can't trade it.
Yeah. And like I say, the internet was, you know, if you told everybody that the cell phone in your hand was going to be such a main part of people's life, or the internet was going to be such a main part of people's life, it's hard to imagine. But, you know, 10 years from now, this cryptocurrency could solve a lot of international problems with regards to transfer payments, et cetera.
True. I think what people need to watch out for is the so-called stable coins.
Yeah.
Because a lot of these stable coins don't have any backing behind them, even though they say they've got backing behind them. I don't believe it. I'm afraid of another Enron type situation.
I think you're correct on that. One last thing before we leave the metals is platinum is still a dog with some fleas here, hanging around the 1,000 mark. Is there any case to be made that it's inexpensive and it could go on a big run?
Oh yeah, I think there's a lot of bang for the buck in platinum. Certainly, you know, over the last few years, platinum has lost so much of its former premium to gold, but I think platinum is actually the cheapest of the metals, relatively speaking. I think silver and platinum I would prefer over gold in terms of bang for the buck.
Now, the other thing is it could be getting hurt. Like the silver's got the electric cars and it's got the electric batteries in its pocket. So that's two good demand sources. But if platinum is used in the catalytic converters, but they can't make cars because they don't have the chips, wouldn't that be a dampening thing on platinum?
It would be. There's no doubt about the fundamental there. True enough.
Yeah. All right, let's switch over to meats.
Before we do that, let me show one more, Jim, okay?
Sure, sure.
Check out palladium. This is very interesting. Palladium is a tough market. It'll move $1,000, $10,000 a day in futures. But here's what's interesting in palladium. For the first time in a long time, palladium has actually dropped to its lowest level on sentiment in a long time.
Wow, yeah.
To rally 10,000 bucks in value in one day yesterday, and another 7,500 today. So it's a very scary market for most people who trade futures, but certainly one to look at because the big picture, the long-term picture in palladium is very bullish, as you can see from the monthly chart. Every time it's gone to the bottom of the channel, it's skyrocketed back up.
It's got a little bit of thin trading going on, only about 2,900 contracts. So that's obviously one of the problems is liquidity.
Of course, no doubt.
Is there any stocks that specialize in palladium?
There is an ETF. I think it's PLTT or PLLT.
Okay.
It's yeah. I think there's a couple of other one. PLG, I think, is Platinum Group Metals. It's a relatively cheap stock. There are a few, not many, but just a few.
Now, the hogs and the cattle did look like, I think they were at higher levels and pulled back. Do those charts indicate that we might be near a low point there?
Yeah, we are still in a seasonal decline in hogs. Here's the hog chart. Let me bring up the daily. So the hogs remain in a seasonal decline, but that usually bottoms toward the end of the year. So I wouldn't be in a hurry to be a buyer here. In fact, then it's too low to be a seller. That's the hog chart. The cattle have gone the other way. They've actually gone up, and here's the cattle chart. But remember the ETF I showed before, COW, is a good ETF for these. Cattle go in the exact opposite way. And here's COW, which is a good way to trade these without leverage, of course. Here's COW. And there's the cow chart.
Well, that looks like it's okay, huh?
It's fine. You know, getting down to the bottom of the channel gives us a buying opportunity. The slow and steady move higher.
Well, this next group is the softs, and they all had big runs, but like the coffee, obviously the bloom came off the rose a little bit, but it's still hanging in there. So we got coffee and sugar, and then you were going to mention the cocoa.
Yeah, let's take a look at the sugar again.
Yeah.
Sugar's got a great little ETF called SGG. Here's the sugar ETF. And you can see a nice, slow and steady uptrend over there in the sugar ETF.
Mm-hmm.
And cocoa's got an ETF, NIB. Here's the sugar, the cocoa NIB ETF. Right over here. It's not as beautiful a chart as the sugar is, but all these basic commodities are starting to turn around. And there has been a story recently, although I don't do fundamentals, of an Ebola outbreak in Ivory Coast, where they do most of the cocoa harvesting. For the first time in 25 years, they've actually got an Ebola outbreak, which could have an impact on cocoa prices.
What about JO? Is that still on the bicycle? I was in there in the 30s. It went into the 40s. Is it still in the 40s?
JO is no longer available. I think it's called BJO now. Oh, let me check
Oh,
it
yeah.
out. Yeah, let me check it out. BJO. I don't know what happened to it. It's somewhere around here. I think it's called Java. I can't remember. Let's try it out. Here's a coffee holding. What's going on with my machine? Hang on 1 second, Jim.
Sure.
Here is Java coffee holding. What happened to it? A JVA, I think that's what it is. JVA. Here we go. Here's the coffee holding. It's cheap. It's fun to trade. There's the chart. Again, very consistent in terms of the indicators coming down to the bottom of the channel, back to the top, down to the bottom, back to the top. Very stable, much more so than coffee futures, which are a little bit erratic for most people.
Right. Yeah, this one that I was involved in, JO, had a nice big pullback from 60 down to under 50. And now it looks like it's trying to go back up a bit.
I don't know why I can't find it on my list here. Do you have it on yours?
Yeah, James Oscar.
JO, here we go. All I've got is JO for orange juice futures.
So it doesn't come up as an ETN.
No, it does not.
Huh. Well, there you go. All right. So anyway, that's all the softs that we need to talk about because they all look.
Let's talk about one more, and let's actually talk about OJ. Okay.
Okay, sure.
The orange juice futures have been in a beautiful uptrend, usually a weather market at this time of the year. And there's OJ futures, daily chart, again, in a very strong uptrend. Big
Wow.
move. They didn't close anywhere near the high today, but still in a bull trend.
Yeah. And maybe something with weather could hurt them because, hurricanes are coming in or whatever. Huh?
Oh yeah, for sure.
With regards to the indexes, they all look pretty good to you, because the enthusiasm certainly is quite high. I was wondering what investor sentiment looked like on SPX or, S&P, whatever you want to put up there.
I'll show you.
It's got to be somewhere near the observation tower on the Empire State Building,
Close to the 90s. Here it is, S&P. So we have already gone above the 88 level. But let me show you something super interesting.
Sure.
Hold on 1 second. Let me go here and bring this one up. Hold on a minute. Be right there. This one is really fascinating. Check this out. Moment, please. So here is the chart for the Russell 2000.
Right.
I'm going to bring it into a weekly pattern right over here. And the green shows commercial buying activity.
Oh, that's
So
interesting.
commercials have been huge buyers. In fact, they've bought almost a record quantity of futures in the IWM or the
Right.
2000. Very significant because it occurs during a period of sideways movement.
Sure.
I'm talking about this at my annual forecast, my quarterly forecast this weekend. I think there's a huge move coming to the upside in the IWM. And that's where I think.
And it closed above 220, which was kind of a big number.
Yeah. So I think that's still to come. So, a lot of people are looking at the S&P. They're looking at the Qs. I think the big move is going to be IWM, the Russell 2000.
I understood in the IWM, you may have a lot of reopening stocks and energy stocks. So, if energy is going to make a rebound and then the reopening is going to get a little bit more footing, it would make sense that this might be the way to go. And like I say, it's way off the highs. You got to $15 to get to the highs. So there's still plenty of room on the upside.
Exactly. And so you can see this pattern even better during this entire period of basically sideways movement. Commercials continue to accumulate positions on the net long side, which is very significant. Now, just let me be clear. This doesn't mean that every commercial in the business is long. It simply means that the majority are long.
Right. And it's definitely somewhat that in the last 90 days or so, it seems to be accelerating.
Oh, definitely. No doubt about it. I think that.
Boy, that's a good little tip there. There's no doubt about that. Because it's nice to know what the larger commercials are doing,
They're basically telling us they want to buy value. So
yeah, exactly. They want to, they don't want to buy everything that's already been bid up.
Exactly.
On the, okay, just two last things. One is on interest rates. So if we could look at either the long bond or treasury bond or the 10-year.
One moment, let me bring it up on the screen.
Because I don't know, somebody was telling me, listen, in 2011, Japan had a 1 3/4 10-year note and they've never seen it again. And in 2014 or 2013, Germany had a 1.75% note on a 10-year and they've never seen it again. And some people are telling me that in March, we saw 175 and you're never going to see that again.
Wouldn't be surprised.
Because the whole world is talking 2% and 2.5% and higher interest rates. And, talk about everybody's talking one side of the story. Nobody's talking 1%.
Yeah, let me bring up the right chart. I'm having trouble finding the right chart. So let me show this one. Here we're going to go to a chart.
TLT would be something to look at.
I want to show the futures because we got a bigger history there.
Okay.
Let me just get it. Hang on one second.
Because this is a big part of what's going to be happening. If rates never go higher than 175, there's a lot of runway in a lot of things,
That's
including
right.
inflation.
Yeah, hang on a second. I should get it momentarily. Hang on one second, please. Here we go. So check this out. This is the 5-year cycle in interest rate futures, short term. So futures going up means interest rates going down.
Right.
The theoretical top is 100, which would mean 0 interest rates. You can see what the cycle is projecting. It's projecting lower, which means lower futures, higher interest rates, and that top should occur, I would say, by the end of the year. So start looking for the Fed to tighten.
Or maybe the people just want to get out of bonds because they can see their inflation is outpacing their interest rate to such a degree that, we don't want to be stuck in bonds. Now, what about the US dollar? How is that going to look? Because, it's been fairly firm lately, but it's not really strong.
Well, here's the dollar cycles. Again, the big picture is what I want to show you here. And
low interest and a weak dollar would get people going to the exits, maybe.
Well, here's the bottom of the thing. Check this out. We've got commercial buying of the dollar. You've got a cyclical low coming right now. That would mean higher interest rates. Interest rates go up, dollar goes up.
Okay, that would make sense. So you got commercials starting to take a bite of the dollar in this 90 range, and the interest rates look like they could roll over going into the end of the year.
More commercial buying in dollar index futures than we've seen since 2009.
And then if gold breaks above 1860, then things could be getting out of hand a little bit. So that's why chasing it with some higher rates might happen at that point.
You betcha.
Yeah. All right. Well, we certainly went over quite a bit of information here today, Jake, as we always do. And like I say, we got the Labor Day coming up, and then I think a lot of people start placing their bets for the end of the year, one way or the other. So we'll have to see if the dollar starts getting stronger, interest rates start rising, the gold and the silver get on their bicycle, and some of these other things we talked about. So before we leave, though, can you just reintroduce yourself and make sure people know how to get a hold of you? And if you have any special offers or if you have any webinars coming up, you want to mention them?
Yeah, Jim, I have a webinar coming up this weekend on Saturday. It's going to be 90 minutes long. I'm going to give the forecast for the rest of the year and into the beginning of 2022. I'm going to show the cycles. I'm going to show the setups, the triggers, and I'm going to show my best 10 trades till the end of the year. They can find out about that on my website, jakebernstein.com.
Okay, that's perfect. So everybody take advantage of that on this one that's coming up on Saturday. You still got a few days to get that organized. As far as Option Professor, we do have a weekly market update that's free of charge. You simply go over to optionprofessor.com, put your email in, and you're on the list. David, I'm going to send it back to you. And thank you very much, Jake. Hopefully, in a little bit of time goes by, we'll reconvene and see what's going on. But thank you very much for being here today.
Hey, thank you, Jim. Looking forward to it.
Okay.
All right. Thanks, guys.
Thanks.
Yeah, ton of good info today. So yeah, we covered a lot. So just a quick reminder for everyone listening, be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates on new episodes when they're posted. Also, you can just go to TimingResearch.com to get access to any of the past shows or reports as soon as they're available permanently, as well as this episode will be there on the homepage as soon as I can get it posted. So I just want to thank my guests again for today, Jake Bernstein of jakebernstein.com and the Option Professor of optionprofessor.com. Thanks, everyone.
Take care, David.